Welcome to the show, guys. We have a delicious market morsels for you today, a weekly digest of the bulls and the bears and the ticker tape tales. So stay tuned. We have a lot to go over in such a short amount of time. First up, it's the federal rate cut. Everybody's talking about it. You need to know about it. The recent interest rate cuts by the Federal Reserve have given a boost to equities, especially in sectors like technology, consumer goods. The market will closely monitor the effects of this cut along with future rate cut expectations. The bond market reactions. Treasury yields have fluctuated following the Fed's decision, which could influence investors' preferences between bonds and stocks. Lower yields typically make equities more attractive. Next is the tech sector momentum. The technology sector, including companies like NVIDIA, have continued to perform well, partly due to its resilience in the favorable borrowing conditions created by these lower interest rates. The consumer sentiment, the economic data such as the Michigan Consumer Survey, hey, I live here, to be released on September 27th, will offer insight into consumer confidence, which can impact market movement. Next is the unemployment trends. The labor market has shown signs of cooling with an uptick in unemployment rates. This trend could continue to weigh on market segments as it suggests a slower economic growth. Inflation data. Inflation remains a key focus for investors. Even with signs of easing, inflation and levels of their impact on the consumer spending and corporate earnings will remain crucial. The earnings reports. The market will be sensitive to earnings results from major companies, especially in logistics and retail sectors, as these industries provide insight into the broader economic health. And of course, the geopolitical factors, external factors like ongoing geopolitical tensions could add volatility to the market, particularly in energy and commodity sectors. And of course, we have that sector rotation. As interest rates fall, there may be a shift into focus towards sectors like real estate and utilities, particularly in the energy and commodity sector. Volatility expectations following the recent rallies in markets could face increased volatility as investors assess the sustainable of gains amid a slowing economy. And now, in my conclusion of all of this, the upcoming week presents a mix of optimism and caution for investors. The Federal Reserve interest rate cut offers a favorable environment for equities, particularly in sectors sensitive to those borrowing costs. However, concerns about economic growth, inflation, and unemployment could dampen investor sentiment, leading to its potential volatility. Investors should stay alert to key data releases, particularly around consumer confidence and corporate earnings, as these will provide important signs about the market's direction. Thank you guys so much for joining me. I appreciate you being here. If you found this entertaining or educational at all, please hit that like and that subscribe. Of course, if you have a heart of gold and an open mind, you can join our Discord family absolutely free. Just click on the More section down there. I have a link tree to everything, all the pages that we do, including this YouTube with a free swing trading instructional guide on how I work, how I created a process, and it might be right for you. Everything's free. Welcome to the free resource.